Hello, stock market investors. Here's another video on investing in the stock market. Let's get started. First of all, let's look at the history of the stock market. It began to take shape in the late 16th and early 17th centuries. That's a long time, ladies and gentlemen. Why invest in the stock market? For obvious reasons. We all want a good financial egg nest in our financial future. And also, it helps inflation protection. Stocks have historically outpaced the rate of inflation over the long term. So that alone should make us feel very secure. In addition, your assets have the potential to grow at a rate higher than inflation. On my prior video, I mentioned that you can go simply on your cell phones and look under the Cash App or Venmo to start investing within like 5-10 minutes. But here's some solid brokerage firms that are really good. They have a good track record, and Vanguard is one, and I invest with Vanguard, as well as Fidelity. That's another good one. Here's the caveat. They both will charge you a small fee, but their service is well worth it. I'm not trying to take away from using the Cash App or Venmo's app to invest in the stock market, because I use Cash App and I've never had a problem in years. So you make the call, do your research, and start investing. And next, we'll look at Dividend Aristocrats companies to invest in. And please be mindful again that all companies do not provide their stockholders with dividends. Dividend Aristocrats can be appealing for investors seeking a combination of dividend income and potential capital appreciation. These companies are often viewed as reliable and financially sound, with the ability to weather economic downturns and provide consistent returns to their shareholders over the long term. First, let's look at ticker symbols, and they are shorthand codes used to uniquely identify publicly traded securities on the stock exchanges. For instance, Tesla, their ticker symbol is TSLA. So you'll be seeing a lot of ticker symbols when you really start investing, and you can use sometimes not the entire name to look it up, just the ticker symbol alone. Coca-Cola, KO, Johnson & Johnson, JNJ, and so on and so forth. Now, let's look at some aristocrat companies, and they are as follows. Coca-Cola Company, Consolidated Edison, Inc., Johnson & Johnson, Walmart, of course, Kimberly-Clark Corporation, McDonald's, Procter & Gamble, Target, Exxon, and Chevron. One profound thing about stock investing is that it can provide you with passive income, and that is making money while you sleep. Next up, let's look at diversifying our financial portfolios. So, stocks are definitely something that should be in your portfolio. It's long term and it really takes patience, and you should practice dollar cost averaging. That's putting money in once a month or twice a month. It all depends on you, but the same amount. And you have to be persistent, even when this market goes down. Still continue to put that same amount of money in consistently. Dollar cost averaging. Then there's real estate, of course. Buying a single family home is okay, but if you're looking for cash flow, it's best to buy like a duplex or a triplex or whatever. You're looking for that cash flow, and those types of real estate investments will definitely give you that. So you may want to start off with not investing in a single family unit because you're really not getting anything back. You do have a home, you can sell it for more if the market goes up. But again, it's in your hand and you have to think about what's best for you and your families. Another great investment is gold, silver, precious metals. I personally like gold. It's like God's money. It's going to be around forever. So I would try to buy low and sell high. Jewelry is always around. 14 karat, 24 karat, 18 karat. And then there's also those little gold bars you can buy and store away in your safe. One thing's for sure is that you must consistently invest in your financial portfolio. Why keep investing, you ask? Because it provides impressive long-term returns that outpace other investment options like bonds or savings accounts. The beauty of bonds and savings accounts, you can trust that your money will be there. But you can't trust that it will grow. So, because those interest rates are very small in those types of accounts. However, I see in some savings accounts, the interest rates, most banks are providing a higher rate of return. So if it's 5% or more, that's cool. Keep investing long term. It's a sure way to retire earlier than most. But even when you retire, continue to invest. If you need to, of course. Be prepared to self-educate on investments. It's best to learn about every investment you secure and any future investments. Go back and take a college course or read books or look at YouTube, particularly my videos, of course. Another great resource is Yahoo Finance. Invest now for your future and for your children's future. Please like and subscribe. Breaking news. I did write an ebook about stocks and crypto and gold. Some of you may have noticed that I didn't mention that much about crypto because I have very little in crypto. I'm not really a fond believer of it just yet. Thanks for watching, and until my next video, goodbye.